I have to say that I was very, very flattered when you invited me. And let me also say that I'm always very happy when I am in Switzerland because I feel very much secure here. It reminds me the say of Einstein. He was told when he was in Princeton, what do you do if there is a nuclear war? And he would say, I don't hesitate, I go back to Switzerland. So the interlocutors say, but Professor, you know, nuclear war means bombs everywhere in Europe and nuclear clouds and the fallout of the nuclear clouds and everywhere. Well, he says, well, I know that everything happens in Switzerland, but 50 years later. So it's no allusion to the European Union, of course. So I will concentrate a little bit on the main theme of this day, which is the international monetary system, of course, through the grid of what we have observed during the last period, including, of course, the crisis. Before the global financial crisis of the advanced economy, it is the way I would qualify what has erupted in 2007. Before it erupted, namely in the first half of 2007, and for central banks, more precisely, I have to say, in August 2007, the common wisdom was more or less twofold. First, there was a very strong belief that the financial sector was resilient. The efficient market hypothesis was very much considered as a reliable assumption, confirmed by empirical research over quite a long period of time. The so-called deepening and sophistication of financial instruments and markets were considered as integral part of the remarkable successes attained, both in terms of long-term growth, with a very low standard deviation of yearly growth, and of course also of low inflation with remarkable meager standard deviation of yearly inflation. So sustainable growth, stable price. We were in this extraordinarily long period of great moderation, and of course the able functioning of the financial system was part, in the view of the mainstream economists, of this remarkable success. I have to say also that the remarkable absorption of the dotcom bubble explosion by the financial sector in general, without any bankruptcy of any financial institutions, without any interruption of the functioning of any market, with appropriate liquidity maintained everywhere in the financial sector, was considered by the mainstream analysis as an additional demonstration of the fact that sophistication, deregulation had formidably improved the resilience of the financial sector and of the economy as a whole. By the way, it seems to me that it is a terrible lesson for us, because it means that even when we have a crisis, we can work out a wrong diagnosis on the situation. The best example of wrong diagnosis of such a lesson to be drawn from a crisis is the dot-com bubble explosion. To sum up, we were deemed to benefit, before the start of the crisis, to benefit really profoundly from a very, very solid, resilient financial sector, doing its own job of allocating in the best fashion possible scarce capital. Second, on the other hand, the international monetary system was very much considered as potentially unstable. The Trifid dilemma was stressed regularly and stressed as, continuing even after the explosion of the Bretton Woods system. The volatility of the exchange markets was underlined. The euro-dollar, for instance, exchange rates could go from 1.17 at the beginning of the euro down to 0.83 and then up to 1.50 something, signaling up and down of a very important size. Of course, had been observed also in the past before the euro. So the rhetoric stressing the absolute necessity of setting up a solid and reliable IMS was, I have to say, it seems to me, I'm speaking under the control of eminent professors, but was very much considered dominant in academia. Not only, I have to say, the long-term fragilities and weaknesses of the international monetary system were mentioned, but also the idea that a risky and very painful transition towards a new system, whether multipolar or based on a new anchor, would also be very, very difficult. And the potential instabilities which would be associated with a change in the position of the US dollar was very much underlined. Now we are 5 years and a half after the start of the crisis. When I compare what I had perhaps a little bit rapidly qualified as mainstream expectations to what has really happened, I see, of course, and you will not learn anything from what I will say now, a dramatic financial crisis suggesting that the entire financial sector of the advanced economy was that fragile that it could collapse, had central banks on the one hand, and governments on the other hand had not taken extraordinarily bold decisions. For the central bank, needless to say that they are very bold and they continue to be very bold. For governments, let me only mention en passant that when we computed in the ECB the level of taxpayer risk that was earmarked through various means on both sides of the Atlantic, recapitalization, guarantees of all kinds, toxic asset schemes and so forth, we arrived in the ECB computation to 27% of the GDP of the US on the one hand and 27% of the GDP of the EU on the other hand. By the way, the same proportion on both sides of the Atlantic, which was a little bit surprising because the epicenter was obviously in the United States of America. But not surprising if you take the interdependencies of the present world. But on top of that, you might remember that in a very large number of advanced economy, there was some kind of blanket political guarantee, and I can say that here too, according to which the heads of state or government were saying there will not be any bankruptcy after Lehman Brothers of major financial institutions in my country. And this was said by the President of the US, by Gordon Brown, by the Kanzlerin, by Nicolas Sarkozy, by all heads of state and government that were touched by this crisis. So the cost which had to be, I would say, paid to avoid the total collapse of that financial system which was supposed to be extremely resilient is gigantic. On the other hand, another surprise, we are 5 years and a half after the start of the crisis, and there has been no dramatic crisis in the international monetary system. No dramatic ups and downs that would put into question the stability of the IMS. We have had a system which very surprisingly has demonstrated a level of solidity, a degree of resilience which has been quite remarkable until now. Quite remarkable until now. And there I have, of course, to be very cautious and very prudent myself, and not be too definitive on what could happen from now on. But it's clear, again, that there was no exchange rate crisis inside the constellation of the major convertible floating currencies. There was no crisis in the relationship between the major floating currencies and the renminbi, even if there has been tensions, of course, and there has been remaining tensions, particularly with emerging countries issuing currencies that were pushed up by markets, and that can be fully understood, complained that the accommodating policies of central banks of advanced economy were complicating their own problem to preserve the stability of their currency. So, I wanted to draw your attention to this very surprising observation. We have the chance of having the worst crisis since World War II, which could have been, in my own reading, the worst crisis since World War I, had not appropriate decisions be taken by central banks and by governments, and we have to be aware of that. It is even graver than we think, because again, we had very rapid, swift, expeditious and bold decisions that were taken in real time. So we have the experience of the worst crisis probably of all the 20th century. Now, let me tell you that I propose now to elaborate a little bit on trying to respond quite rapidly, obviously, because I have to let time for questions, if I understand well. And of course, the issue is very, very vast. But I would like to try to respond rapidly to 4 major questions. First questions, what happened exactly to the core convertible currencies of the advanced economy during the last 10 years in terms of relative importance? Having been president of the ECB, you understand that it seems to me that it is something which might be of interest. Then I will try to respond to a second question, which would be very simple. Can we still speak of an exorbitant privilege of the US dollar? Third question, are we or not de facto experiencing the emergence of a tripolar, IMS? Is it not that we have already this emergence? And I will respond then to a fourth question, which is why the IMS has been relatively resilient during this crisis till now. And then, if we have time, I will conclude. First question, what happened exactly to the convertible core currencies of the advanced economy? I have looked at the allocation of official exchange reserves as one criteria and as the international debt markets as another criteria. And I have to say that I have seen, as regards the allocation of official exchange reserves, that we had observed indeed changes that are not totally negligible during the last period. We're comparing the second quarter of 2012 to the first quarter of 1999, at the very beginning of the euro. We observe a certain decrease for dollar official reserves from 71.2% of the total allocated reserves down to 61.9%, whilst at the same time the euro official reserves went up from 18 to 25. That has been observed, including, of course, taking into account the period when the euro area became the epicenter of the global crisis of the advanced economy 3 years ago at the end of 2009. in terms of relative importance, the euro reserves, allocated reserves, were representing 25% of the dollar reserves at the beginning of 1999. Now they represent around 40% of the dollar reserves. This is a structural change in the international monetary system, which I have to say has to be mentioned. Of course, I have, as you know, as the academia knows, I am mentioning the allocated reserve because you can compute this split between the various currencies in allocated reserves. But the amount of unallocated reserves is absolutely gigantic, and I draw our attention to that. These statistics have to be taken with a grain of salt. It's probably a little bit more complicated than that when, again, you take into account the fact that you have only part of the story because a very large amount of reserves are not allocated. Other measure, I mentioned international debt markets. Then we can also see, I have to say, a very, very good level of stability in this respect. When I look at the euro in terms of narrow measure, it is the measure of the only issuance in a currency other than the national one. Then I see that we have a level of euro share, if I may, which was 25% at the beginning of the euro, and which is approximately 25% today. So not much change, at least in the year 2000, if you compare year 2000 and year 2011. When we really started the euro, it was below 25%. It was in 99, at the beginning of, end of 98, beginning of 98, it was 20%. So you can see some increase if you take the very beginning of the euro. As regards the US dollar, you see that it went up. The proportion of the international debt market denominated in dollar went up from something like 42.5% in the narrow presentation up to 51%. So the dollar took a big position, which was clearly not really the case of the euro. And for the dollar, it was to the detriment of the yen. The yen went down very substantially, signaling something which is very important at a global level, from 17% down to 6%. If I take the global measure, namely not only those securities that are issued in another currency than the resident country, but all, absolutely all, securities that are issuance that are denominated in that currency, then you see that the euro came from 24.7 to 25.7, so plus 1%. That the dollar went a little bit down from 41 to 39, and that the yen went down quite substantially. So all over this period, I see quite a remarkable stability of the euro. And of course, as you see, a proportion of the euro, particularly I have to say in the global definition, which is gone, I would say, very, very impressively up, because it represented only 60% of the issuance in dollar with the global definition in 2000, and now it represents quite exactly two-thirds, 66.5%. So, conclusion, during all this period, which was the period, again, of the setting up of the euro, but also the period of the last years of the Great Moderation and the first year of the dramatic crisis I have already mentioned, I see quite a lot of stability, the euro going up a little bit, the dollar maintaining its position, and some changes in the yen part. I could elaborate more on that, but I think it captures quite well a level of plasticity on the one hand, but also stability on the other hand. Let me turn to the second question. Can we still speak of an exorbitant privilege of the US dollar? So very rapidly, the traditional presentation of the so-called privilege by Trichet and the dilemma of Trichet was, of course, absolutely seminal in terms of understanding what was behind the Bretton Woods system. The idea was that even after the, I would say, collapse of the Bretton Woods system, this exorbitant privilege and the contradiction that are going with it continued. And I was very surprised myself in going through the literature to see to which extent it remains a very easy explanation to qualify one of the main problems of the present IMS. And I was wondering whether we could really say that it is really the case. I would present some questions that seems to me are not necessarily compatible with the fact that there is still an exorbitant privilege which would be given voluntarily by the rest of the world to the US dollar, because there is no legal privilege, of course, after the demise of the Bretton Woods system. I would say first, if there was a very, very strong and permanent preference for the US dollar, it seems to me that we would have then both low market interest rates and quite a solid real effective exchange rate position as a permanent feature of that particular currency that was at the very heart of a privilege, an exorbitant privilege. As we all know, it's not the case. It's not the case as regards the real effective exchange rate. On the contrary, at the present moment, we are, according to all computation, when you take all partners of the United States of America, we have a real effective exchange rate which is very low in historical terms and probably close to the lowest level over the last 35 years. Second observation, we have had during all the period which is under review, period of perceived solidity, strength of the US dollar, and also period of perceived weakness of the US dollar. And that is also something that I can, observe myself as having been at the heart of the G7 meditation during a very, very long period of time. Another observation I would make, and I would draw your attention to, is that the rhetoric itself has changed. We have seen this rating agency starting to tease the US signature, the Treasury signature, a lot of rhetoric, academic or private sector, on the issue of whether or not the dollar is reliable and so forth. The private sector, eminent personalities mentioning the fact that they have decided not to invest anymore in Treasury, which was probably the worst mistake they could do at the moment this was said. But nevertheless, it shows quite clearly that there is something which has changed. And you will see that in my own understanding, it is the privilege of the advanced economy, which is no more existing in the eyes of the rest of the world, and also in the eyes of the investors and savers everywhere. And that is something which is important. That is probably one of the main characteristics of the present crisis, namely that there is no more privilege given to any particular signature. But it would mean, of course, that the US dollar is treated as are the other currencies of the major advanced economy. Let me deepen a little bit more this meditation. The argument goes with the argument of the exorbitant privilege that only that particular privilege would permit the long-lasting deficit of the current account of the US, and we are back to Trifid and the Trifid dilemma. And there I will draw your attention to the fact that according to simple observation, the deficit is not the privilege of the United States of America. Australia, Canada, UK, US, of course, New Zealand, France, Italy, Spain are countries that were in deficit in 2011 and have very much the characteristics of countries that are more or less structurally in deficit. The US is in deficit. The G7 is in deficit. 2 countries in the G7 only are not in deficit, current account deficit. The OECD countries as a whole are in deficit when you compute everything. So I would say there is something that we have to reflect a bit more again. It suggests that the US might be more the illustration of an overall posture, which is not only the posture of one particular economy and one particular country, but perhaps representing a more generalized posture in the advanced economy. Of course, I have to say that the figures I have mentioned are not to be applied to Switzerland, which is posting a fantastic current account surplus. As I said already, not on Germany, not on Japan, and again, it's not, absolutely not, the generalized position of all advanced economy, but many, many, many of them are in that position. So there was some kind of reinterpretation of the privilege of the US that has been mentioned by academia and also by some academics that are here. I'm speaking particularly of Madame Ray. The idea being the US has the privilege of having more return per unit of capital on its own investment abroad than what it pays to have the investment of the foreigners in his own economy. And that is true. I think it is obvious that when you do empirical research, you observe that, and that has been again underlined by academia. One of the most surprising discovery I made in looking at a number of work which has been done on that, including by the ECB economists, was that there was the sentiment that part of this surprising result, which was not necessarily to be attributed to a fantastic cleverness of the US investment abroad, but on the fact that you had capital gains that had over time permitted to reinforce, if I may, the profitability of the investment of the US abroad. But those capital gains seems to come partially from the fact that there was a reevaluation of the currency in which they were investing. So paradoxically, this reinterpretation of the exorbitant privilege could perhaps be due to the fact that, as I said, the exchange rate of the US dollar is in real terms at a low level. So I don't insist too much on that, but it seems to me that it's very difficult, obviously, to argue that there is still an exorbitant privilege. And it would be quite surprising, obviously, taking into account that we have now no legal privilege at all, and we are in a world where investors and savers are the world over really supposed to be extraordinarily attentive to what they are doing and very attentive not to give any privilege to anybody. But I will go back to that in a minute. Now, I turn to the next question. Are we de facto experiencing the emergence of a tripolar IMS? Two observations I would make under your control. One is that before, I would say, last very interesting work that again has been made by academia, the idea was more or less the evolution of the IMS, which has to be centered on one anchor at a global level, is very, very much made on the basis of sharp and abrupt changes. You have the sterling, and then the sterling remains dominant until World War II, and then you have the dollar taking over. That is very clear, very, very neat. There is a formidable resistance to such a change, so it explains why the change is abrupt. That was very much the traditional view, I would say, under your control. It was certainly Trifid views. And the idea again was the US, even being the leading power in the beginning of the 20th century, even being the leading creditor nation in 18 after World War I, despite those facts, the sterling was still dominant currency until World War II. Some work has been done by Eichengreen and Flandreau in particular, and they are more or less arguing that it's more complicated than that the currency composition of the global foreign exchange reserves were much more balanced, that the dollar was taking more or less over in the mid-20s, that the currency for denomination for the international bonds, the dollar was dominating as soon as 29, before World War II, out of the Commonwealth area, and that finally there was a much more plasticity in the system than we thought previously, and that we had obviously a more or less bipolar system with the sterling and the dollar existing before World War II. So again, I would say I was quite convinced by those analysis, and I was thinking if history can guide us, perhaps it means that transition to a new system might be more rapid than we thought previously, that the emergence of a multipolar system might be perhaps easier than previously thought, and that that process perhaps was on its way to go on. And of course the next question is trying to respond to the precise questions of this chapter that I proposed to you. Are we de facto experiencing today the emergence of a tripolar IMS? Then I have to mention some work again which has been done by the ECB, and of course we have to take with great precaution, but they tested a model, Fletcher and Mail in particular, with the methodology which had been introduced by Frankel and Weil, and they more or less introduced the dollar, the euro, and a regional factor in their analysis, empirical analysis. And what they are suggesting, which is quite interesting, that there is in emerging Asia a regional factor that appears to be much more important than in all other regions of the emerging world. And so that you have the US dollar factor and this regional factor. The euro doesn't play an important role. In emerging Europe, the euro appears as dominant. In Latin America, the dollar is dominant. And in emerging countries in general, we see some emergence of some multipolar underlying system with a significant presence of the dollar, of the euro, but of course the dollar being dominant, and of this regional factor. So again, this suggests that the structure of the international monetary system is much more complex, perhaps, than we used to consider. Perhaps we are a little bit blind, and the luminosity, if I may, of the US dollar is such that we have a tendency to see only this, of course, dominant currency. But I would propose to you that the system, the complex system in which we are plunged and which is moving under our eyes would have perhaps 5 major characteristics. One would be that it is based upon 2 major currencies at the global level, the dollar being significantly more influential in emerging economies, but not upon, of course, the advanced economy. We have a generalized floating in the advanced economy, and it goes up and down, and there we are not at all, of course, and we all know that, of course, in the Bretton Woods system. Second, the dollar exerts a total domination in the Gulf countries. Everybody knows that. And a very large one in Latin America, not surprisingly. The euro exerts an important influence in emerging Europe. I already said that, not surprising. The dollar has, in this empirical analysis, practically no influence. There is both an influence of the dollar, more important, and of the euro in the Middle East and North Africa. The figures that are coming out of this empirical research gives in that region 0.49 for the dollar, 0.15 for the euro. So you see a big difference, but nevertheless a presence of the 2 poles. And in emerging Asia, we see the emergence of a phenomenon which suggests a significant regional influence. Emerging Asia means something, I mean, in terms of growth, in terms of dynamism. It is, of course, something which is of extreme importance. So the underlying, of course, easy explanation is we have a Chinese dominance which explains why there is some kind of clustering around China in emerging Asia, which explains this significant influence of the regional factor. I don't elaborate more on that, but it seems to me that it is very interesting to see with, again, more attention given to the, I would say, the fine structure, la structure fine of the IMS to try to understand better. And of course it is very much a lot of avenues for research because there is no definitive conclusion on that. Now let me turn to the last question I proposed. Why is it that the IMS has been relatively resilient during the crisis? This crisis, the the crisis of the advanced economies. Let's not forget that it is the main characteristic of the present crisis. It looks like both the euro and the dollar had their spontaneous stabilizer. That would be my first proposal, I mean, based upon observations and also of practical action. The dollar was terribly hit, of course, potentially, by the fact that the crisis exploded in the United States, and the epicenter of the crisis from, say, August 2007 up to Lehman Brothers was in the US. It was the subprime crisis which was developing, epicenter of the crisis in the US. And then you had the Lehman Brothers bankruptcy and this immediate and grave threat of collapse of the entire financial sector, again, epicenter of the crisis in the United States of America. Until end of 2009, one could say the epicenter of the crisis was in the US, but it was a crisis, of course, of the advanced economy as a whole. Then it appears that the level of risk aversion became absolutely dramatically high, of course, in the world, and this triggered repatriation of capital on their dollar-based, whether it was capital that were managed from New York and had engaged in large-scale non-dollar investment, they were going back to their dollar base. Whether it was capital in the Gulf or in the oil-exporting countries that were, of course, the pool of this capital were in dollars, they had invested a lot in other currencies, they repatriated. So you had an element of repatriation of dollar, of, a very powerful move that was totally countering the potential weakness of the dollar as epicenter of the crisis, and even dominating this potential weakness of the dollar. So the dollar was automatically, if I may, stabilized by this phenomenon that had been very, very, very powerful. And we could see at a certain moment the dollar being really, really strong, to the surprise of the observers and market participants. But those two phenomena played together and avoided, in my own first proposal, the any kind of drama as regards the dollar. Again, there was some kind of automatic stabilization. As regards the euro, in the time of the epicenter of the crisis in the US, the euro was potentially pushed up, but also followed its own fundamentals. It had strong fundamentals as a whole during all that period, of course, when the US dollar has very, very meager positions as regards the current account, as we all know, and the fiscal position also. So all taken into account, I would say that the spontaneous forces would push the euro perhaps up, and we went quite high at a certain moment, but as you know, we had the epicenter of the crisis crossing the Atlantic, and at the end of 2009, beginning of 2010, we were the epicenter of the sovereign risk crisis in the advanced economy, which of course gave the euro an element of weakness. And all this were balancing. We are now at a period where, again, I can say 5.5 years after the start of the crisis, there was no particular major difficulty in handling the core of the international monetary system, which is something which can be explained perhaps, despite all the ex-ante Cassandras that had very good argument too, it might be partially explained by what I said, and of course I go very rapidly because time is elapsing. There is another reason, I will draw your attention to this reason, which we should also consider. We were in different positions, we were in different universe in the advanced economy constituency. The structure of the economies are not the same, the fundamentals are not the same. The epicenter of the crisis, as I said, was crossing the Atlantic at a certain moment. But one thing is sure, the cooperation between central banks of the advanced economy, and all central banks, but again, this is a crisis of the advanced economy, had been very intense, quite remarkable, with this extraordinary innovation that were the swaps agreement between major central banks, permitting, in particular, as far as the European are concerned, to deliver dollar with collateral denominated in euro, for instance, and of course that was part of a multilateral set of swaps, and all that is clearly demonstrating an extraordinary capacity to cope with exceptional circumstances in accepting to take decisions that were not obviously in the textbooks. And if I look at the capacity of all those major central banks in the advanced economy to cope with what they were observing in their own economy, namely the fact that the private sector was not intermediating correctly, or not at all, to be clear, in some cases, in comparison with what existed before the crisis, whether it is intermediation by financial institutions or intermediation through markets, that was recognized by the central banks, and they embarked, as you know, in non-standard measure of great boldness, obviously, which were, in my own understanding of what has been done, even if it is not presented like that in all central banks, and even if the instruments that are utilized are not the same, direct intervention on markets in the US and the UK or in Japan, supply of liquidity on an unlimited mode with fixed interest rates in the case of the central bank of the euro area. But in all cases, what has been observed is a very big increase of the balance sheet, a very big increase to the extent that the order of magnitude of the augmentation of the size of the balance sheets of the central banks since the crisis started is around a little bit more than perhaps 12% of the GDP of the US, 12% of the GDP of the euro area, and probably more in the UK and in Japan. So I think that to understand why the IMS has been quite resilient in those circumstances, you had to inject fundamentals, certainly. You have to inject, I would say, spontaneous behavior of market participants, investors and savers the world over, as I suggested. But you have also to inject a great deal of response by central banks. And I am really convinced that if it had not been the case, if liquidity, if, in my, again, proposal, intermediation would not have been substituted in this, I would say, very significant way by central banks when private sector was not doing it, we would be probably in a different universe. That's, again, do not pretend to be definitive on that, but I suggest that we should reflect in this direction. Now, I see time elapsing. I am asking the director whether he gives me generously 4 minutes more or whether I should stop there, because I know that you want question, and because my conclusion is there in front of my...
Give us a succinct conclusion.
A very succinct conclusion. Okay. First, I would say there is no more risk-free asset. It's a statement. Second, the global economy needs discipline and governance at the right level, which is global. Not only in crisis time, but also during all the time, which is in between crises, and namely during the time where you have to prevent the next crisis. And it's always, you always have to prevent the next crisis. And that calls for very significant reinforcing of the multilateral surveillance and the mutual assessment of policies of systemically important economies that have been, decided by the G20 and should be implemented with much more energy, obviously. Second, I would say that we should not forget that everything started with the collapse of the financial system, so reinforcing the intimate cooperation on the regulatory and supervision of the financial system at a global level, with extreme attention to the level playing field, seems to me absolutely decisive. And of course, we have also to strengthen, more in the perspective of the IMS, to strengthen and expand IMF facilities like FCLs, PCLs, and we have, of course, to continue considering that the cooperation demonstrated between central banks is absolutely essential. It has functioned pretty well between central banks of the advanced economy because the crisis was hitting advanced economy, but it is a general rule. Central banks, this has been proved by the present situation, central banks have an incredible level of, I would say, role to play in those circumstances. And it is, in my opinion, extremely important that we could demonstrate a capacity to respond to extraordinarily demanding circumstances. As you see, I'm not suggesting that we are embarking on a new anchor in the IMS. I'm not suggesting that we are embarking on SDR playing a central role. I really trust that if we do what we decided that we should do in the framework of the G20, and if we accompany this emergence of a more multipolar system, which is already taking place in front of us, under our eyes, we would probably do what is appropriate. I say that with prudence, with caution. Again, I have so many examples of wrong diagnosis and wrong recommendations. But again, it seems to me that we have a unique experience under our eyes. But again, conclusion, let's be very humble. And we have seen, again, a capacity to make mistakes from time to time, which calls for humility. I have an Einstein joke again at the end. He said, theory, Einstein. Yeah, well, after all, we are in Zurich. He said, theory is when you know everything and nothing works. Practice is when everything works and you don't know why. Here, and it could qualify quite well, the beginning of the crisis. Here we have admirably unite theory and practice. Nothing works and we don't know why.
So, Mr. Trichet, thank you very much for your insightful lecture, which provides a lot of food for thought. There is now the possibility to ask questions, And if you want to ask a question, raise your hand, and somebody will quickly jump to you and give you the microphone. So who wants to start? Here is in the front, or in the back, and then in the front.
Yes. Mr. Trichet, thank you very much for your presentation. I've got one question. You mentioned the expansion of the balance sheets of the central banks. How can the ECB bring its balance sheet and the interest rates back to a normal level without damaging the market for government bonds? Thanks.
Shall I respond immediately? No? No.
Yeah, you can respond immediately. Yes.
I mean, as you prefer.
Yes, just respond immediately.
So you mentioned the ECB. I guess that you were mentioning also Bank of England, Bank of Japan, and the Federal Reserve. Because as you know, in the balance sheets of these banks, there is much, much, much more treasuries than in the balance sheet of the ECB. So that's my first observation. As I said, the balance sheet of the central banks have augmented considerably, unexpectedly, obviously, through various means. In the case of the ECB, it is massively the supply of liquidity at fixed rate and on an unlimited basis, which has started very early in the crisis, because the first non-standard measure of that type, we decided it in the 9th of August 2007. A second observation, as you know, and I'm very, very, I would say, convinced of the pertinence of this doctrine. We are separating, with a separation principle, the interest rates on the one hand and the non-standard measure on the other hand. The doctrine I would propose to you is your interest rates must be in line with the achievement of your primary mandate, which is price stability. So you take the situation, you look at the economy, you look at all the elements that can permit you to define what is necessary in terms of interest rates to deliver price stability. By the way, we delivered price stability very, very well in the ECB since the setting up of the euro, even in a better way than before with the national currencies, even the best national currencies. I mentioned that en passant. Then when you have your interest rates, which are not necessarily at a zero level or very close to zero to start the non-standard measure, you might observe that the intermediation on markets does not function correctly, that you have a lot of disruption of the normal functioning of markets that are hampering the transmission of your monetary policy. And then you are countering the, I would say, disruption of the appropriate transmission of your monetary policy through the non-standard measure. In the case of the ECB, again, the main instruments that had been utilized until now was this supply of liquidity, because we were really in a situation where we could see that the transmission of monetary policy was not functioning correctly. It could be also in the form of outright purchases on secondary markets. In the case of the US, it is massively outright purchases on the secondary market, also in the case of the UK, as you know, also in the case of Japan. If you do your non-standard measure with this idea that it is done to counter disruption of markets, as soon as the markets are functioning normally, you must be able, of course, to withdraw. And that is what all colleagues are thinking, if I may, when I refer to the discussion we had in the past. So they all think that they can certainly withdraw their non-standard measure, which, again, if they are done because the private markets are not functioning normally, when private markets are back to a normal functioning, which supposes, of course, a lot of efforts made by the private sector itself, made by the, I would say, authorities in general through all possible means. But again, I insist on the fact that I am a little bit puzzled by the theory according to which you first go to zero level as regards interest rates, or very close to zero, and then you embark in the non-standard measure. It bothered me a little bit because everybody knows that there are unintended consequences that are associated with the zero interest rate level, and that we might very well be paving the way for future problems if we stay too long at a zero interest rates level.
Okay, thank you very much. There's another question. One short question, short answer.
The question will be short, no problem.
Got the message.
Monsieur Trichet, you mentioned that there are no risk-free assets anymore. I guess that means that there is no risk-free interest rates either. Now, risk-free interest rates do play a fundamental and essential role in financial theory and in almost all financial models, evaluating assets and liabilities, as well as companies. Now, what does it mean if we do not have risk-free interest rates anymore for our models, for our theory, and also for capital requirements regarding banks and insurance companies?
Well, as I said, we have to be very humble, and a lot of things I mentioned are avenues for research. I fully agree with you, of course. It is an earthquake. And I remember, only to give you one example of a practitioner, when we were discussing in the international community on what to tell the MD of the IMF, when, for instance, Rodrigo de Rato was appointed, the idea was you have to dismantle your lending wing. Because, you know, now we are in a world where there is no more problem of sovereign risk. No more. Because the emerging countries have done the job. Latin America, Africa, Asia. Now they are, you know, managed quite well. And, of course, the advanced economy are totally out of such threats. So the private sector is doing the job pretty well. So dismantle your lending wing. Concentrate, of course, on surveillance. That is essential for the IMF. And the same to the successor. The same, you know, guidance were given to the successor. So we have to recognize that probably we were wrong. Because we see that we have a real issue with this sovereign risk crisis, which in my opinion is, again, a global sovereign risk crisis hitting the advanced economy with an epicenter in the euro area. I don't say that to say, well, there is no problem in the euro area. I think there is a big issue in the euro area, and I have absolutely no complacency at all. But I think really that it is a problem for all advanced economy, and it creates the big problem you are mentioning. I think we have to reflect on models where you cannot rely necessarily upon this idea that you have risk-free interest rates, as you said. There is always a counterparty risk, and it has to be taken into account. There is no risk-free signature, which means probably that there is, I mean, again, we have to reflect on that. I fully agree that it is an extremely important question. One of the most, that's the reason why it was my first point in the conclusion.